Hi, everybody. I'm very pleased to be with you here today with a wonderful panel that is going to be talking about connecting and developing green and sustainable bond markets, and talk in particular about an effort that IDB has been developing, which is the Green Bond Transparency
Que no
Platform.
estás aquí. María, María, wait. I'm going to give you the sign. Wait, sorry.
Okay.
20 seconds. Wait. Ten seconds. 5, 4, 3, 2, go.
Hi, everybody. It's a pleasure to be with you here. We have a wonderful panel, and basically today we are going to talk about a strategy that IDB has been trying to promote in the region to promote transparency and attract investors for green finance in the region, and in particular, what has been for the IDB Group the promotion of a new platform, the Green Bond Transparency Platform. We have a panel of many perspectives, bringing the perspective of an issuer, perspectives of investors, perspective also of funds on how they are perceiving the markets and how we see these green and sustainable bond markets as very, let's say, attractive and interesting opportunities to help the countries and to help our economies to align to the Paris Agreement. We will start with the two presentations. So I will invite Tatiana Gasparotto. She is Associate Director for Regions in the Climate Bond Initiative. She's going to give us an overview about the green bond market in Latin America and the Caribbean. And please, Tatiana, let's start with you, and then I will pass to Alex Vaza to talk about the platform I was mentioning. Thank you.
Fantastic. Thank you so much, Maria. Thank you for the invitation. It's a pleasure to be here with you all today. So I'm going to talk quickly about, where we've come in terms of the Latin American green and sustainable bond market, and also take you a little bit through some of the best practices in our analysis, especially in terms of reporting in a work that we've recently published together with the IDB. So if we could go to the next slide, please. Basically, we, since the beginning, we've always seen Latin America as a key region that holds a pipeline of green investment, right? And although it is a relatively recent market, it's a market that has grown substantially from basically zero, and now we're close to 25 billion US dollars in issuance. We have seen some diversification in the market in the recent couple of years, especially with the pandemic. So the rise in social bonds and sustainability bonds, where credentials get coupled between green and social. So you can see there how that trajectory has been within Latin America. Next slide, please. So I wanted to give a little bit more context in terms of what is the Latin American market for green and sustainable bonds. Essentially, we do have, which is quite similar to the international markets, we still do have quite an important share of proceeds being allocated towards energy. That's very natural, very natural growth that we've seen in the market. Energy assets are usually identifiable, but I think what draws our attention here is exactly the rise in other sectors and the growth of assets in transport, in water, and especially land use. So until very, very recently, we didn't have criteria and standards for the agriculture and land use space, and those have recently come to market, and CBI has been coordinating that work. So with that, we do begin to see quite an expansion of financial products being allocated towards the land use space and agri more generally. So that is a huge potential for the region. In terms of the breakdown between the countries, we do have a very close breakdown between Brazil and Chile. Chile has been at the forefront of sovereign issuances in the region, with the government of Chile having issued multiple sovereign bonds, also as part of a partnership between CBI and IDB. IDB. We've also got Mexico, which was actually one of the very first markets to kick off in LATAM. Peru, Colombia, Argentina. We do see a lot of green finance initiatives, sustainable finance initiatives kicking off in these markets. So I think we will, out of those 6 key markets, I think that's where we will see the most of issuance over the next couple of years. Though I do want to highlight that the Central American countries have also been taken forward quite a number of initiatives, and we've had, supranationals like the Central American Development Bank, which has issued green bonds in the market. Next slide, please. So to talk just briefly about what are the best practices and what do we see happening, especially regarding transparency and reporting, right? So we all know that one of the big selling points of green bonds, or any labeled bond for that matter, is the added level of disclosure and the added level of transparency that one would have over a certain financial deal, and that's especially attractive to investors, right? So this year we've published, this is the 3rd edition of our post-issuance reporting in the green bond market, which looks at exactly, so, given that we don't have the labeled bond market is not, regulated globally. There is no, one entity that is, monitoring or basically dictating how everyone should act. But the market has been largely self-regulated, and the market has really been pushing itself, especially driven by investors, but pushing itself towards best practices around reporting and availability. And that essentially means reporting against the use of proceeds on a yearly basis during the lifetime of the bond, as well as having an external review during the structuring of the bond. Another trend that we've seen recently with thematic bonds is exactly the development of impact reporting. So in this analysis, we've looked at close to 700 bonds, and we've identified that at least 77% of the issuers are reporting against use of proceeds, 59% are reporting on impact. Now, obviously, that might have some slight change depending on the amount issued and the number of bonds. But overall, this is to say that we've had almost 100% of all the bonds being reported against. And it should also be said that even though we didn't have all the bonds reporting during the time of the analysis that the analysis took place, we have actually kept a close eye on the bonds that we had previously categorized as non-reporting. And we've seen that now pretty much 100% of them have reported. So I think that really shows that greenwashing within the thematic labeled market, within the green bond market, specifically, tends to be rare at the moment. Next slide, please. So we do have, but we do have some variations, right? So whilst it's the picture is quite positive across the board, there is variation, especially regarding deal size, whether or not that issuer carries out external reviews, also in terms of issuer type. So over on the right side of the screen, you can see a breakdown per region. I mean, obviously, we're talking about LATAM here, and Latin America will end up drawing attention because we did have about half of the volume issued not reporting at the time, but it was basically because issuers just happened to take slightly longer this time to report. The cutoff date was just slightly before the pandemic, so Q1 last year. So what we have seen is that, like I said, since then, a lot of the issuers have actually reported. So across the board, we are in a pretty good shape. We also do see a trend where, depending on issuer size and deal size, we tend to have less what we call minimum score. So if you could change to the next slide, please, which is also the final slide. So our methodology basically analyzes a number of factors, and we've come up with this score point system where it will go from 0 to 25 points, and the average that we saw globally was of 19.2 points, which is maintaining good performance from the 2019 study. So the difference that I was talking about essentially is that where, you know, usually the larger the deal size, the larger the issuer type, the less frequency of low scores are observed, but pretty much consistent throughout. The different sizes of issuers, the different types of issuers and the different sizes of deals are also pretty consistent. So that was the quick snapshot I wanted to give. I think, you know, overall, we always get questions around, you know, is this working? Are issuers effectively, you know, following suit to what they promise at the time of issuance? You know, is there a lot of greenwash and so on? And I think this analysis comes to show that actually performance, at least in the green bond market specifically, has been quite consistent throughout. Thank you very much.
Thank you so much, Tatiana. I think it's great to see that we have seen an improvement and an important improvement in the reporting of the green bond issuances, which was not the case some years ago when we actually did support you with the first report. And that actually is a good indice that, you know, at least in general, the market, as you are saying, although there is this danger and perception that there could be a greenwashing, apparently the commitment of the issuers is there to demonstrate what they are doing. There are a lot of challenges though, and I think that's a bit what we are going to discuss also with the Green Bond Transparency Platform. How can we help the reporting to help happening in a way that can be standardized, comparable? We have very many different methodologies, and again, if we want to see these green bonds being really truly instruments that demonstrate that we are helping the region to transition to a low carbon resilient economy, we need also to demonstrate that with indicators of impact as well. Alex, I would like to invite Alex Vaza. Alex Vaza works also in the Inter-American Development Bank. He's leading the team working on the Green Bond Transparency Platform. This platform we wanted to explain and show today to you, after which I'm going to bring a couple of market players to discuss and comment around it. Alex, please, the floor is with you.
Thank you, Maria, and thank you, Tatiana. Actually, Tatiana gave the main reason for our Green Bond Transparency Platform when we supported the second report of post-issuance disclosure. We thought what could help Latin America to showcase the bonds and the reporting that have been done already in this market. And we consulted with several market players, including CBI, standard setters, issuers, external reviewers, investment banks, other stock markets, whether such a platform could help the market. And the resounding answer was yes. So what I'm gonna show you today with the presentation is how the Green Bond Transparency Platform, what it wants to achieve, and a couple of screenshots on how, what you would see if you enter right now on greenbondtransparency.com. The platform is free to use. You do not need a login. The only two entities that log into the platform to upload data are issuers and external reviewers. Next slide, please. So the background of our work with the Green Bond Transparency Platform comes from our work with the issuers directly. And we have supported about 30% of the volume of thematic bonds in Latin America through technical assistance and financial support like credit guarantees, credit enhancement guarantees. Next slide, please. So the Green Bond Transparency Platform wants to allow issuers to report on their impact and their use of proceeds according to their commitments that they have done in the green bond framework. This could be the individual reporting bond by bond, or it could be the a fund type of reporting on several bonds and the impacts of disaggregated group of bonds. The platform provides comparability, transparency, traceability, and completeness for all of these bonds. So usually a bond enters the platform after issuance or at issuance, and a year later the reporting comes. We think that the platform helps issuers, external reviewers alike for peer learning, and investors to take better and informed decisions, and can be an input to regulatory discussions. Next slide, please. This is a summary in the sense that it encourages issuers to do complete reporting and facilitates this process through standardized Excel sheets. It facilitates the disclosure of these use of proceeds and impacts. It provides investors with relevant and consistent information, as well as enables decisions on the buying, holding, or selling of these bonds. And it lowers the cost of analyzing the bonds and actually issuing the bonds, because new issuers can learn from what the status of the market is currently. Next slide, please. So this slide, if you enter the platform, you see that you can filter by type of issuance jurisdiction, by type of issuer, be it a sovereign, a development bank, a local government, a financial corporate, a non-financial corporate. All bonds, be they labeled or unlabeled, are welcome in the platform. They would be labeled as such in the sense that you would see whether they have a second party opinion or a CBI certification, an assurance, or an impact verification, or none of this. But all bonds that call themselves green are welcome, and we have a team that helps to upload these bonds on the platform. Next slide, please. This is an example of a development bank of BNDES, and you see on the number 1 and 2 very basic data. On the map, you see that BNDES has provided GPS location data for their 8 wind projects. On number 3, you see the different taxonomies, 2 of which are currently functional. The EU Green Bonds Standard and ISO 14030 are, once they are decided, can be implemented. But for now, we have the Climate Bonds Initiative as well as the Green Bond Principles. You see on 4, the disbursement, key performance indicator, and framework schedule, as well as below that BNDES has reported 8 projects and their disbursement. Next slide, please. The next slide shows the 2 main KPIs that that BNDES reports against: megawatts energy generated, megawatt hours generated, and tons of CO2 reduced. And this for the past 5 years. And all of this data, though even the one before, can be downloaded by one click on the Excel button, and no login is necessary for that. Next slide, please. We have been advised and supported by several entities, and we are very lucky and grateful for this support, which we continue to exchange on how we can make better our platform. So if you're interested, please reach out to us at greenbondtransparency.com or an email which will be in the invitation, support@greenbondtransparency.com. Thank you.
Alex, it's really great to see what have been done with the Green Bond Transparency platform. As Alex was saying, independent of the methodologies, we can help the issuers to be able to present that information in a way that more and more can demonstrate comparability, but also important to develop a new asset class to demonstrate also to the investors the opportunity. This provides transparency and facilitates also investors to understand what the region is doing. I wanted to now pass to a group of panelists, and we have a great group of panelists, and I'm really sorry that we don't have a lot of time for conversating, because I think we could spend a lot of time discussing here. I would like to start with Andrés Pérez from the Ministry of Finance of Chile. Chile was the first government actually to do a sovereign green bond, and I wanted to ask Andrés, if you can tell us a bit what has been the lessons learned from your side in structuring this bond and reporting it. And further, how did you see this bond being linked or serving or supporting Chile with its commitments under the Climate Change Convention and the Paris Agreement? Thank you very much.
Thank you very much for the opportunity to share some perspective from Chile. I'm going to try to keep my intervention or remarks crisp and brief. So it's important to say that with the support of the Inter-American Development Bank and Climate Bonds Initiative, we began issuing green bonds in June of 2019. So we do have some experience in this arena thus far. Since then, since our initial issuances, we have witnessed important shifts in the interest of thematic bonds, stretching from the overall commitments of the issuers, the consistency of its policies with respect to sustainable development, as well as the depth or the amount of the breadth of the reporting, both ex ante and ex post. In our case, we've stretched somewhat beyond the green bond market since we widened the set of instruments towards social and sustainable bonds in recent years. Thus far, the Republic of Chile, as the Treasury, or the Ministry of Finance, has issued a total of $16.2 billion in thematic bonds, which account for roughly 16.6% of our outstanding central government debt. Now, according to our estimates, this is among the highest in the world. Okay. As an issuer of different types of instruments, we especially recognize that transparency is critical in terms of ensuring our credibility as an issuer with respect to the use of proceeds of the issuances and their corresponding impact. So, long introduction. I said that I was going to keep this crisp, but I'll go to the lessons. There are plenty of lessons I'd like to say and like to highlight. First of all, there's the first one I'd like to say that to any issuer that is planning on issuing these kinds of instruments, there's a lot of processes that are both ex ante and ex post are operationally demanding. This is not only in terms of the debt management offices that they need to be further built on or developed, both in terms of their capacity and their know-how. Not only because this is not the same issuance of an instrument as a plain vanilla, but also there are a lot of challenges both in ex ante and ex post. Okay. Not the least, there's a lot of coordination that needs to be done across the government, especially with line ministries that are engaged in the allocation and the investment of the different kinds of resources. Separately, there's a lot of demand and interest that is increasing in a broad sense, and therefore this market is just beginning, right? So there's a part of the issuer that there's an ongoing learning process. So I would definitely say that the lessons that I'm highlighting here are not final. Actually, we continue to learn and see how we are consistently challenged to ensure that we remain at the forefront in this market. And finally, I'd like to say, in terms of our lessons, marketing efforts need to be strengthened on behalf of the issuer. The issuing one of these bonds is not the same as a plain vanilla one. Actually, the questions that we receive in the marketing process are not only the same macro fiscal, inflation, growth kind of questions, but also they're increasingly more deeper into detail on the aspects of the overall commitment of the issuer on climate action, among others. And then how do these issuances support our commitments on climate action? I'd say that thus far we've issued $7.7 billion equivalent in sovereign green bonds. These are primarily invested in clean transportation projects that contribute to the decarbonization of Chile's energy matrix. So there directly we see a contribution of our towards our climate action commitments. And these projects are mainly metro projects, railroads, among others. And these expenditures, due to the long-term horizon of the projects, we expect these to be completely allocated within a 5-year horizon. So there's that one aspect that we see a direct impact or contribution towards our climate action commitments. But then again, I say more broadly, I'd say our green bond issuances have been effective in demonstrating that one can advance on concrete climate action, while at the same time benefit financially. Okay, it's important to say that we have benefited from very favorable yields, an important diversification of our investor base, while at the same time advancing our climate action commitments. To a certain extent, when we started issuing these instruments, this went against conventional wisdom, in which at the time, any aspect that was made towards climate action was seen as to be made at a financial cost, but in our case, it seems to be the contrary. And finally, these are green bond issuances or sustainable bond issuances complement other initiatives that we have developed at the Ministry of Finance, such as making progress on the measurement of climate budgeting and on public spending, as well as development of human capital in the local capital market. Thanks.
Actually, it's an incredible example, the example of Chile. There is a lot of countries now in the region and the world also doing the same, but I think certainly in our region, it was a lot of innovation. And what I think is important, Andres, as you were saying, a lot of learning, is still learning before and after, as you said, but also the issuance believing to bring yields, bringing opportunities, and at the same time, developing capacity also of better coordination in the government. So that's very interesting. And as I think on the reporting side, also I think is a very interesting example, which by the way, we're very happy to collaborate also in the Green Bond Transparency Platform. I will pass now to Carmen Luzzo. She's the head of fixed income in the Principles for Responsible Investment. And Carmen has a lot of experience about what investors are looking for in terms of, value added of those kinds of investments. And I would like to, Carmen, hear a bit from you. Alex was talking also about the Green Bond Transparency Platform being important for investors. Why you think the demonstration of ESG and green impacts are becoming more relevant for investors?
Thank you, Maria, for the warm introduction, and delighted to be here with you today. Thanks for the opportunity. Let me just start by saying very quickly that for those of you who do not know what the Principle for Responsible Investment is, we're the largest association, or I should say rather a movement of investors who adhere to a set of 6 principles ranging from incorporating ESG factors in their investment analysis and decision-making processes to seeking appropriate disclosure from investee entities and really working collaboratively to enhance and implement these 6 principles. And back in the day when the PRI was launched in 2006 at the initiative of the then UN Secretary Kofi Annan, but there were only 100 investors supporting the movement, and most of them were equity investors. And since then, we've moved a long way. We're now about to celebrate our number 4,000 signatory. Collectively, our signatories manage over $100 trillion, of which about 40% is in fixed income. And let me just say that fixed income investors have traditionally embraced a bit later than equity investors the concept of ESG incorporation. Why? Because they always thought that perhaps not being shareholders, not owning a share of a company and not having voting rights, they had less of a say in the strategy and in the governance of a particular issuers. And also, it's much more difficult to engage as a bondholder than it is for an equity holder, so that you have fewer institutionalized channels, if you will, including the participations to the AGMs. But things are changing very rapidly now. I must say 2015, the signing of the Paris Agreement was a pivotal year, but in the last few years, we've seen the interest by fixed income investors really skyrocketing among our signatory base because there is a much better appreciation of the need to assess risks in a more holistic way. Client demand is definitely rising, but both from the retail investors and also for the asset owners who are becoming a lot more strategic when it comes to ESG objectives, particularly the climate ones. And there are also rapid changes going on at the regulatory level, spearheaded by the EU authorities where I'm based, but also visible in Canada, for example, in some Asian countries, and finally with the change in administration now also in the US. So if you look back, really, the story has been pretty similar with the green bonds. When the first green bond was issued by the European Investment Bank in 2007, it took a while before the corporate sector started issuing bonds, starting, if I remember correctly, about 2013, when the first Swedish property company entered the market, and then it was followed by a number of others. I remember the case of Apple and GE, Credit Agricole, for example. And last year, we reached a milestone when the outstanding issuance exceeded 1 trillion in the year of the pandemic. So even there, we've started a bit slow, slow, but the traction is getting bigger and bigger. And I should say that for fixed income investors in particular, green bonds have been instrumental to get both the investors and the issuers to focus on environmentally objectives, sustainable objectives. Why? Because they have opened the door to really thinking about single projects, the use of proceeds, the ring fencing of these proceeds, for which investors need guidance, but gives them reassurance about where they're putting the money as well. And that has opened the door to obviously all sorts of thematic bonds investing, social bonds, bonds aligned with the SDG. More recently, we've also seen the emergence of sustainability linked bonds, which are linked more to KPIs and strategies rather than specific projects. But definitely the market is in a state of creative innovations. And I should say what we're seeing on the investor side is really the willingness to lend, but with more strings attached. And on the issuer side, as Andres was saying, really perform better on ESG credentials to attract capital and lower the cost of capital. Indeed, I think green bonds are a great way for issuers to diversify their structure, their funding structure and their investor base, but also they bring a lot more stable investing because they're linked to many infrastructure projects, and so many investors buy to hold. And finally, they're increasingly attractive because of very strong demand. We are seeing now more and more examples of the so-called greenium in the market, where green bonds trade with spreads that are compressed relative to comparable bonds with the same maturities. And the sovereign market is expanding very fast, and Chile is a very good example. I'm glad that Andres was on this panel. So we should not forget that in the overall grand scheme of things, as I mentioned, green bonds represent 1 trillion, but the overall outstanding bond market is over 120 trillion. So there's still a lot of room to growth, but there is an increasing desire, at least from our signatory base, to allocate capital with more purpose and really a desire to shape real world outcomes, whether these are positive or whether they contribute to reducing negative ones.
Thank you very much. And a small follow-up from my side to you. How do you see comparable and transparent data supporting the development of this market and supporting also the achievement to the Paris Agreement?
Sure. Thank you, Maria. This is a crucial question because peer comparison and transparency are key. First, if you think about it in credit risk, all valuations are always relative. So comparison is very, very important. Secondly, I think the comparison is also, and the data availability to start with, is very important for the issuers themselves to build capacity and understand their exposure to climate change, even before identifying through which projects to achieve their climate ambition. So these objectives depend on their exposure that varies quite a lot by country, by sector, and even at the individual corporate entity, they can vary quite a lot depending on the mitigants and the strategies that companies have put in place. Thirdly, I would say that I'm glad that Tatiana showed that the issuance is increasing not just in the energy sector, but also in other sectors that perhaps are very high in energy use, and they're central to the transition to a low carbon economy. I'm thinking of the cement industry, for example, or the chemical industries that are energy intensive, but we need these products to make electric cars, to make solar panels, to make wind turbines, for example, or build green buildings. And so the data comparability can really increase the credibility of the project and reduce the risk of greenwashing. So investors' confidence is crucial, and this is why it's important that the environmental integrity of the bond is ensured in its entirety, from issuance to monitoring and to the reporting procedure. And finally, let me just make one last point very quickly, which is the data are important to profile issuers and to verify, but the green projects, the green projects, but also they're important for engagement, because to an extent the data give a very static assessment of an issuer, but by engaging in an informed fashion thanks to the data, one can have a more dynamic and forward-looking picture. And so of course engagement for fixed income, I said earlier, is not that straightforward as natural and as it is for equity investors, but it could open the door, especially with the issuance of green bonds, to have more broader discussions about ESG topics in general. And I'm glad that Andres made the point about the increased communication across different industries, different ministries within a government, because we've seen that has helped in our investor base also to improve the communication between ESG analysts and credit analysts as well. So I would say comparability and transparency are key really to verify, but also to engage.
Thank you so much. And I think this point of engagement is extremely important also to develop the potential of the market in the region. As you said, the market got to 1 trillion. However, our region is still 2% of this market. So there's a huge potential actually to leverage also in Latin America and Caribbean. And it is important precisely to engage the players, both the issuers and the investors, including local investors. I want to turn now to Claudia Goldmeyer. She is from Colchester Global Investors. Claudia is a great, actually, collaborator from the private sector who has been also advising us and working with us on the Green Bond Transparency platform. Claudia, following up on the previous discussions we were having, I would like to get your perception on how the green bond market is providing opportunity for investors to become more Paris aligned. And relating to that again, coming up also from the discussions with Carmen, how do you see the increased transparency and comparability of non-financial data and ensuring materiality of this non-financial data associated to the green impacts? How do you see this as an important part of the mix? Thank you.
Sure, thank you. Thanks for having me. And let me start with your sort of first question. So I think governments, as we've heard, from previous speakers, Andres, Tatiana, and Alex as well, governments around the world have signed up to 2030 and 2050 targets for achieving the environmental goals set out in the Paris Agreement and the UN Sustainable Development Goals, or SDGs, which are, less than just a decade away. And governments, as we have seen now, they actually need to walk the talk, and they can take advantage of the aftermath of the COVID period to deliver a green recovery. The green recovery is vital for tackling the urgent and interconnected challenges of climate change and biodiversity loss. And this can be achieved via the green bond issuances or other sustainability bonds. We have seen an increased opportunity set for investors, with Europe really taking the center stage, which is driven by regulations, but emerging markets, as we have seen or heard also from Andres in the case of Chile, as Carmen was mentioning, and Tatiana on the Mexican bond markets, we have seen issuances coming along on that side. And new issues coming up with Colombia, Peru, just to mention a few of them. But clearly the public sector can't do it all on its own. And so corporate space, we have seen actually a similar trend, whilst it started later, as Carmen rightly pointed out. But the proceeds are also used for similar purposes to develop renewable energy projects, construction of green buildings, or the transition to low emission vehicles. So what does it do for investor side, such as asset owners and asset managers? We can join in by allocating capital according to their Paris aligned or other sustainability objectives. And it's also worth noting that the Paris alignment isn't only applicable, as we've heard already, to green bonds, but equally transferable to blue bonds. In particular, by mentioning blue bonds, is for the region for small islands or the Caribbean countries, as about almost 100% of the population lives at the coast, and they need investments to protect the tourism or sustainable fishing sectors for their economies going forward. Other thematic bonds, which include sustainability SDG frameworks, all serve for really a similar purpose in achieving the goals for the Paris Agreement and the UN 2030 agenda. When it comes to bond investments, asset managers will support labeled bonds, in particular those which are supported by these global policy frameworks. And all these labeled bonds, as we've heard as well, have common challenges. One being, is it really a true green bond, or do these bonds really meet their purposes? And I agree that these can significantly be reduced if issuers choose to align their issuance with Paris-aligned frameworks or taxonomies. And clearly the Green Bond Transparency Platform is very helpful with that transparency effort. A bit of a long answer, but let me go on to your second questions in terms of can sort of non-financial reporting support more investments with Paris alignment investments? And I would say yes, the answer to that, but let me elaborate a little bit more. More reliable and comparable data, as we've heard as well, really provides for investors more information usefulness in our due diligence and valuations process. It also allows for investors to engage, as Carmen rightly pointed out, in particular on the sovereign space. It's much more challenging compared to the corporates. And we can discuss data specifically on these sustainability issues. The more transparent data also reduces assumptions investors need to make. And the impact reporting should provide then investors and other stakeholders with a clear evidence that their provided capital really reaches these truly intended green or social or sustainable projects. And again, helps in reducing those risks of green or social washing. Higher disclosure standards also have the advantage for lowering the funding costs, as we've heard from Andres, which Chile has benefited through the so-called greenium. And at the same time, improved issuer governance standards not just support the lower funding costs, but also reduces the likelihood of an issue being excluded from a green bond index. And for corporates as well, it reduces reputation risk and litigation risks in particular. The data collection can also, for investors, be really resource intensive. And therefore, having impact reporting as a feature of these green social sustainability bonds is becoming increasingly valuable, especially to investors and other stakeholders, to reduce that resource intensity, as we don't need to go and aggregate all these project level data within the portfolios. And that historically could have really presented barriers to entry for smaller investors. Therefore, ensuring platforms like the Green Bond Transparency Platform, which provides a standardized, and as Alex was pointing out, it's free and it can be downloadable into Excel, can help to really attract more capital and reduce the burden for investors as well. Obviously, it's supported by having an annual independent third-party verification report is also helpful. And what we would like to see as well is having project-level data provided with SDGs and taxonomy frameworks aligned that gives a much clearer picture for investors. So in summary, by having the Green Bond Transparency Platform providing non-financial data for investments which follow Paris-aligned frameworks can help investors in their valuation and due diligence work, issuers by providing data to the Green Bond Transparency Platform or other platform are increasing their governance standards and thereby should help reduce the funding costs over time.
Thank you so much. This was a very insightful, actually, argumentation. I think the very key what you were saying also, that investors are having to themselves demonstrating how they align to these international frameworks and need to assess and analyze data. So for them, it's also very important to have this data. And as you were saying, the data can be quite complex because we have data about impact, but also about the institutions that are issuing themselves, which is truly equally important, not just impact, but also the governance. And also how all of these can be compatible and in an aggregated form. So increasingly, how can we promote that this information of the non-financial value, but which has increasingly the greenium value, can be presented in a way that can be digestible as well from the investor point of view. I will pass now to Emily Wang. It's our last panelist before we will pass for some closing remarks. Emily works in the Global Fixed Income Responsible Investing team from the BlackRock. And Emily, going a bit deeper on what we were discussing with Claudia, how do asset managers evaluate their investment impact, and which are the challenges in doing this evaluation?
Yeah, sure. And I think you've touched on something that's very central to the work that me and our team does. So specific to green bonds, for every single green bond dedicated client mandate, or for our green bond funds, and we have a few of which, the largest of them is a UCITS green bond fund tracking the MSCI Global Green Bond Index. That's close to 4 billion euros now, and I think has on the underlying over 300 issuers. Impact is a very, very central to that process and, our evaluation. And, to Claudia's point, it's, something that takes a lot of time. Unfortunately, at BlackRock, we have the scale for it. So every single year, we actually go back and we follow up with all of the issuers of green bonds. We ask for their latest impact report. We actually go through the due diligence to make sure that we understand the methodology. I'll talk to someone like an Andres and make sure that, for Chile's latest, green bond impact report, how much of the proceeds that were raised actually got allocated, what projects were funded, what are the impact of those projects, and make sure that we are comfortable with that methodology too. And so, we really go through issuer by issuer to make sure we can stand behind the numbers. And then, zooming out, once we collect that data on a portfolio level, we want to think about, for us as investors, if I've invested $1 million in the Green Bond Fund across over 300 issuers of green bonds across sectors, what does that translate to, right, when it comes to defensible impact metrics? And, I think the types of standardized metrics that we've seen come out of the Green Bond Principles definitely help when it comes to the types of metrics that we want to see from issuers. We want absolute metrics, with a really good sort of relative baseline with methodologies as much as possible, so that we know it's defensible. And, we aggregate it sort of pro rata, and we have a methodology. We have a 5-year track record of doing this, so we can have a good understanding of, on a portfolio level basis, what that translates into in terms of our investment in your green bonds, and what that means when it comes to the way we think about it is the non-financial return, that we as investors can get. And so, I think it definitely helps something like the Green Bond Transparency Platform. We want the data. We care about the data. We care about a very good methodology for this. And, something I think also the market is increasingly going towards is having sort of issuers report on platforms like the Green Bond Transparency Platform. NASDAQ, I think, also has one. So, that's all sort of very good momentum. And we're definitely in the mix of all of these conversations trying to, make this data something as broadly available and broadly defensible as possible. But that's sort of a long answer to your question. But, in short, it does take a lot of time. And I think, as we see more standards, more sort of guidelines, especially regulatory guidelines, now, thinking about the EU as well as other countries with sort of mandating reporting, that definitely helps us in our ability to invest in this universe. So I think it's all evolving, but as much data and transparency as we can get, sort of the better able we are to tell our own end clients, the defensibility of these green bond proceeds, and the better we are able to, make a judgment when we do the investments as well.
Thank you so much. And I think a lot of lessons learned, the importance of taxonomies, the importance of actually the data crunching, and as you were saying, also the methodologies, and also the taxonomies, methodologies, how do we define what is green and what is not green, no? And in a world where we are having more and more standardization of taxonomies, but it's still far from that, it's extremely important, as you are saying, for investors to be able to crunch and understand what is really behind the promise of green. And I think, again, this is also the opportunity to demonstrate how we are supporting through this green bond market achievement, of the climate convention ambitions, SDG ambitions, and other ambitions as well. I think we had a very good reflection. As I said, I could stay here for a while and come back to every one of you to ask more. That's a conversation that is just starting. The green bond market has developed in the region. We have seen a lot of issuances taking place. Increasingly, actually, the market is starting to boom. But we also see a difficulty and a need for demonstrating that this market, as actually Tatiana was saying at the beginning, it's actually not greenwashing. And how can we then demonstrate that this not greenwashing is actually even resulting in very positive impacts and actually even benefits and innovation, as we heard in the case of Chile. To actually close the panel, I would like to invite Carole Sampari. She's the head of that capital markets and structured finance in IDB Invest, is the private window of IDB. Carole has been working a lot in promoting these markets that Alex presented at the beginning of his presentation. Carole, I would like you to give us some words of wisdom after this wonderful conversation we had in the panel. Thank you. Carole, we can't hear you.
Sorry. Sorry. Thank you. Thank you, Maria, and sorry for the issue with my microphone. So at IDB Invest, we share exactly the same objective as the objective of IDB. We want to develop the debt capital markets so that private and public issuers can finance projects with positive development at lower rates, longer tenor, and different currency, and getting also greater visibility by widening the investor base outside of a traditional bank lending. And we have all witnessed how bonds are playing a significant role in catalyzing investment to achieve the sustainable development goals. So the opportunity for greener and more sustainable issuance in Latin America and the Caribbean is tangible, as the initial effects of the COVID pandemic gradually fades. The next wave of economic policy measures will focus on addressing the economic recovery. And this will create a path ahead that will allow to rebuild the region in a more sustainable and inclusive way. And this will, of course, create further impetus for green and sustainable bonds in our region. So positive trends ahead with respect to the supply side of investment in green bond and sustainable bonds. On the demand side, as we discussed in today's panel, there is a growing demand, global demand for ESG investment, which is reflected in the granium that Claudia and Carmen mentioned. And this growing demand, combined with a low yield environment, is also benefiting our region. So excess investor demand from traditional high-grade thematic bonds will naturally overflow into emerging markets and high yield, and this will benefit Latin America and the Caribbean. We have witnessed a record year in terms of thematic issuance, green and sustainable bond in 2021 so far, and we are expecting the volume more to double even more the level of 2020. That said, as was mentioned in today's panel, it's true that green bond issuance is growing rapidly, but it still represents a small fraction of the overall size of the debt securities market or fixed income markets. So it's important to have standardized and transparent report, and this is what is provided by the Green Bond Transparency Platform. And this is the first of its kind, as it allows issuer or investor to assess whether the products labeled green or sustainable are really genuine. It also helps investor to compare assets and the impact and make informed investment decision. As Claudia explained, transparent data and free data provided by the Green Bond Transparency Platform allow smaller investors to participate. So this creates a broader and a more vibrant ecosystem. Finally, liquidity. in a dynamic secondary market, it's also the last piece of the puzzle to attract consistent investment towards those sustainable debt and consistent investment towards, in our case, our region, Latin America and the Caribbean. So today's webinar has made it clear that investors need to be assured about the long-term commitment of green and sustainable bond delivering on its promises. And this report data has to be complemented with solid governance and also explicit sustainability strategy by the issuer, i.e. the engagement of the issuer, as Carmen explained in today's webinar. So transparency and integrity are both critical for the participation of private investors and the expansion of the green and sustainable bond market. And any breach of environmental and social integrity of the green bond could derail this growth and have devastating consequences for this nascent asset class. As we said earlier, the green and sustainable bond market only represent a small fraction of the overall size of the fixed income market. With our development mandate and focus on social and green investment, IDB Invest and IDB are playing a major role in the creation of the green and sustainable bond market in LAC, and we are continuously working towards creating and nurturing the primary and secondary capital markets in our region. We want to enhance the integrity and the transparency of the asset class required to foster issuer and investor confidence, and we're developing the tool such as the Green Bond Transparency Platform. And equally important, we want also to promote the best market practices. We want to educate and foster awareness and strategic commitment to ESG goals. And we welcome the news and we welcome the momentum created by the Green Bond Transparency Platform. And we will welcome any replication of this platform in other markets outside of Latin America and the Caribbean, and also globally, as was mentioned by Emily, about this momentum and this need for more of those tools.
Thank you so much, Carol. I mean, there is not many things that I can add here, just to say what you were mentioning, that to create an asset class, we also need to give credibility to it. But also, as the market evolves, hopefully, this can really be an asset class, a secondary market, and really have the greenium of the resources valued, so the non-financial data, no? And what you were saying, this work that the group or IDB Group as a whole is being doing in the region with private, public, and different types of issuers in different sectors is key to make it actually an opportunity, as what was for the government of Chile, for the markets to leverage investments in a different way and actually be able to achieve so ambitious and needed investments that need to be done in the region to achieve the Paris Agreement. I think I want just to thank again this wonderful panel. It was a very, very nice experience, at least for me, to see all these different perceptions and the different opportunities here from the group of the Inter-American Development Bank Group, both public and private. We want to thank you all to participate in this. And here in the different media, we are actually sharing this webinar with you. You will also find some links and some information about the Green Bond Transparency Platform, and also what the IDB Group has been offering in support for developing these markets in Latin America and Caribbean. Thank you very much. And I hope to see you soon again in one of those webinars and these discussions we are trying to promote.